So today we're going to be going over the Bitcoin miners. With that being said, let's get it. Okay, so I'm going to touch briefly on Bitcoin real quick, and that's basically that Bitcoin just had a weekly close candle. You guys are probably wondering, why does this matter? Well, it matters because generally speaking, Bitcoin does have some influence over the movement of price on the Bitcoin miners. So if Bitcoin is going up, the miners will likely continue to go up. There is also some correlation between the traditional markets and the Bitcoin miners as well. So generally speaking, when these outlier assets and indices go up, the price of the miners go up, and the inverse is also true. So we basically have another indecision candle here on Bitcoin. Again, the first one was like a major indecision candle with a close above this 9 EMA here, and then the second one got a close below the 9 EMA. And the candle itself, although it's another indecision candle, is actually lower than the previous one. That's not great. I don't like that personally. It does look a little bit bearish to me, but as far as I'm concerned, really, in truth, nothing's really changed. I mean, this is mainly just a sideways movement at the top of a move. The question is it accumulation or is it distribution? We don't know yet. We have to wait to see what the movement is to confirm one way or another exactly what Bitcoin's going to do, because we don't know yet. It's mainly just going sideways. I mean, there's plenty of times you could have said, oh, well, it's at the top, so it must be distribution, but that actually wasn't the case. I mean, every single time this has happened, and of course, I knew this was likely going to play out to the upside because that's just the way that Bitcoin and crypto goes. But every time, minus the bottom here, that it went sideways at the top of a move, it just went sideways and kept going up. In this case, it was sideways and down, and then it went up. So again, we'll have to see. It's hard to say exactly. I mean, we got this death cross back here, and people probably thought it was the end of the bull run, and I was telling you guys likely that's not the case, and then we moved higher, and we have yet another death cross. And the question is, what's going to happen next? So we'll have to keep an eye out on that. But in terms of the timing of the cycle, we're not at the end yet. I mean, we still have like 9 or 10 months left. Okay, so I wanted to cover that real quick. There's not really a whole lot of earnings coming up this next week that is of great significance. I mean, there's a lot of big companies reporting, no question about that. If you're a dividend investor or you're trying to stock pick or something like that, then that may be something you want to pay attention to. But in terms of the macro scale and the Fed and how it ties into basically the sentiment in the markets, which is what I'm currently looking at, which is really what's moving these markets right now, ultimately is the sentiment and kind of the Fed and the backdrop of the macro. I'm more so concerned about bigger names like the Mag 7, which NVIDIA would be the next big one that's coming up in a couple of weeks, not this week, but next week. Things like Visa, MasterCard, maybe some of the oil companies, because that's also a major metric of economic demand. So just something to consider. But we don't really have a lot of news catalysts coming up this next week. This is actually the wrong week. Sorry about that, y'all. So we'll move over here to the next week. So 17th. Usually a lot of these will come out at 5:30 Pacific Standard Time, or if you're in New York or on the West Coast or something like that, maybe 8:30 Eastern Standard Time. Or sorry, not West Coast, East Coast. So we got some Fed heads talking on Monday. Not really concerned about that. They're probably going to come out and say a bunch of garbage like they always do. It's going to be the same old crap. I'm pretty sure about it, because that's all they've been saying for like weeks and weeks now, is just the same old stuff, just regurgitating the same old nonsense. So yeah, nothing really on Tuesday. Wednesday, let's see what we got here. We already got the CPI and PPI, so that's pretty much out of the way. Fed meeting, I believe, is not until next month. We'll take a look at that later. So nothing really going on Wednesday. Thursday, I don't really have much of anything on Thursday. Probably nothing on Friday too, if I'm not mistaken. So yeah, this is really not a lot going on this week. So basically just standard earnings. It's possible the markets might actually climb this week because, again, most of the major data is out of the way. Again, when the markets are certain that either nothing's going to happen or they're certain of the outcome in any way, shape, or form, that can actually create bullishness because, again, there's nothing to be uncertain about. It's always FUD that causes the markets to chop or go down. But if they can be certain that nothing is going to happen, or certain that what's already happened has happened and it's done with and behind with, and they don't have to worry about it, some nonsense for a few weeks, like the FOMC meeting, That gives them room to climb higher, so we'll have to keep an eye out on that one. The S&P is pushing against the highs. That's another reason why I think it's likely the markets are likely going to climb this week. It's possible this could be a fake out like the last couple of times. We'll have to keep a lookout on that. I have not ruled that out, but I mean, considering this is the third time that we've tested this level and we're still trying to push against the highs, I would say likely is a strong indicator that a breakout is coming sooner rather than later. Again, if you trade for a living, you understand that the more likely level is more likely to break the more times that it's tested, right? Like in this case, in Mara's case, for example, we got 1, 2, 3, 4, 5, 6 tests, and then we finally got a breakdown, right? Now, whether this is actually a breakdown or not, I don't know. It's below the EMAs, below the trend line, below the channel, all that stuff. We'll have to see how this plays out. So as of right now, I would say a good area to get some on Mara is somewhere between 13 to about 1550. I'd be looking for a target anywhere between probably 29 to 33 is a good first target, maybe up to about, I'd say about $50 after that. If you really think it's going to go that high, it's possible. It's just a question of what the catalyst is that's going to send it there. So 152%. Mara does look a little bit bearish getting out of that channel, just so y'all know. That is my opinion on it. I also did want to pull up that a lot of these miners are going to have earnings. So according to TradingView, they can always change that, but you can see what it is here. Again, they can always change the earnings date. That does happen sometimes. So same thing with Riot. We'll have to wait and see if the earnings is actually on that date. I guess really all I can say for now is we'll know for sure what the earnings is when we actually get the release. So something to keep an eye out on. So we got potentially an accumulation block here after a big move up, or what I like to refer to as a pullback in time. I'm not really so concerned about the death cross here. I mean, sure, last time it went down during the death cross, but just because you get a death cross doesn't necessarily mean it has to be a sell-off. It's possible it just goes sideways while the indicators reset. We saw the same thing on Bitcoin, so that could be the case. I'd say it's probably somewhere around the bottom of this block here. Could be a good price to accumulate some, so about 1050. That is right around the bottom of the EMAs as well. So with the target still being up here between 19 to 2120 for about 100% gain. CLSK, so you guys know that CLSK just came out and had great earnings. They really destroyed earnings, yet the price is still going sideways. Keep in mind, this is at the bottom of a move. So every time we've seen this, down here, it went up. Down here, this was more short-lived. It went up substantially. Down here, it went up. Kind of sideways at the bottom here, and each time it went up. And keep in mind, I'm pointing this out to you during an overall macro uptrend, okay? This is still a series of higher highs and higher lows. If it looks something like this, I would say definitely not, but we're not in a bear trend right now. We are in a bull trend overall since the bear market bottoms. If you're looking for the absolute cheapest prices, maybe somewhere around 950 on this one, with the target going probably somewhere between, I'd say maybe about 18 all the way up to 24 here. I do still think 20 to 25, maybe even 30 is possible for this, for about 150% gain. Okay, HUD 8. So it says that they have their earnings next month. It looks like before, either at market open or before market open. Again, I'm not really sure about that one. That's what that sun sign means is it's not post-market. It should be pre-market if I'm not mistaken. So anyways, regardless, it's pretty much in the buy zone that I told you guys about before. So it's between 1750 to 22 here. It's pretty much smack dab in the middle. You can do what you want with that. So 28 to 33 or 34 for the targets up here. You could just play this with options, get some premiums too. If you're concerned that the price isn't going to move, you could just collect options for some passive income during the time that it's basically just going nowhere. So 87%. Cipher, I would still say this one looks pretty bullish. So we did actually flip this resistance zone. It hasn't really shot up like I'd like to see, like an explosive move up, but it is still above. It has flipped into a flip zone at this point. So right here was when it flipped because we came up, broke out, retested, and now we're holding this as support. So as of right now, 5 to 550 is going to be the area to pick some up. Of course, you could always wait. I mean, if you really think it's going down, you're like, man, screw that. I don't think it's going to go anywhere. I think it's bearish. Then maybe 270 to 210. There are some bears in these markets, so fair enough. 1070 would be the target up here at that small little tiny red box up there for about 108% gain. You can see why I put this as an area of resistance. You can see the price action right here. Had a fake out, retested, came back down, retested, had another fake out, and then boom, went straight into a bear market. It's a pretty major level. It's small, but it is a big deal. Okay, so btbt, mainly just sideways on this one. I mean, it's pretty much smack dab in the middle. This one, personally, I would not touch because it's not super cheap, but it's not super expensive. It's kind of just in no man's land. I could say maybe right now that probably somewhere right around this trend line may be a good area to pick some up. It is below the trend line, so that's not great. You could say maybe the next dip buying opportunity down here at 230 to 250. If not, somewhere around 3.25. I mean, this trend line could be drawn any kind of way. I could draw it like this and say it's holding its support. It's, I mean, this is you could even call this something like a rising broadening wedge. As long as it stays within that wedge, this would hold its support. Trading's a very complicated thing. So, anyways, the support zone below that, roughly 160 to about $2, and then the targets up here 410 to about $5. For those of you guys that say, "Oh, it's not going to go up there," it's already been up there 1, 2, 3, 4 times since the bear market bottom started, or I should say, the new bull market started back in late 2022. So, 105% bitf. So this one, this is not great. It did break down out of this triangle. Maybe the next level to pick some up is somewhere between like 90 cents to $1. I would say probably about $1 to $1.20 if I'm being honest. You can see it's testing these kind of candle highs right here, this current candle. So probably somewhere between $1 to $1.20. $1 is a major psychological level too. So $3 to $3.60 is the target I'd be looking at on this one. Let's just say worst case scenario, it does get down to $1 and then you ride it all the way up here. So 250% gain. Let's see, Hive. So this one looks a little bit better in my opinion. Me personally, if I was going to buy, I would be willing to buy right now because it is basically every single time we had a major move up recently, this thing has bounced off of this level pretty hard. So right here, it was about a 200% gain. Took a little while to play out. Keep in mind, these are weekly candles. So these are not going to play out super fast. Most of the time, you may have to wait a little bit. So 112% here. And then kind of right in this area, roughly about 96%. So not too shabby, right? So 215 to 280 here for support. 570 to 760 for the targets up here for a pretty large move, 250%. Iren. So I like this formation. This is creating a series of higher lows and higher highs going up in this bull trend. But in this particular formation right here, this is an ascending triangle, which is a bullish pattern. Basically, it's higher lows going into a flat top. And when we get to the pinnacle of this, if it breaks out according to the bull pattern, the target would be way up here at 7170. So pretty massive upside here. That would actually be past previous all-time highs, if you can see. But for now, I will basically say that somewhere around this trend line would be the best area to pick some up. So about 10, and then the target at 13 to 18 for about 86% gain. But let's just be stupid and say that for whatever reason, the miners do go to new all-time highs, which is possible. It could happen. There is talks about, different states doing strategic Bitcoin reserves and stuff. So, that would be truly insane, 620% gain. But for something like crypto, not out of the ordinary. I've showed you guys these quantum stocks that did like a 40, 50x. So if stocks can do it, crypto can definitely do it. Okay, so Wulf, it does appear that we have finally had, or we're about to have maybe a breakdown out of this rising wedge pattern. This is a bearish pattern. The target would be the bottom of the wedge. In this case, it would be $1. Do I think right now it's going to go all the way down to $1? Probably not. I'm just going to be honest with you about it. I don't think so. I think it will hold in this zone. Maybe this 380 will probably be the area to pick some up. Below that, maybe somewhere around 275, with the target still kind of around these wick highs at about 950. So, best case scenario in this case, 142%, kind of right around the middle of this price action at 275, about 240%. And if for whatever reason you really do believe it's going to go all the way down to the bottom of the wedge, which is textbook, that's technically what's supposed to happen. But considering the timing of the cycle, I'd say not likely, about 870%. Okay, so we'll cover MSTR and COIN real quick. I know that COIN just had earnings. We talked about it. And people would say, oh, it's sold off on earnings. Oh my God, it's sold. What are we going to do? I mean, it had a little baby dip. I wouldn't exactly call this a sell. I mean, this was like probably just some profit taking would be my guess. I mean, this thing is almost non-existent. It's like a 6% move. It's kind of crazy. But we basically just pulled back a little bit, pretty much right into former structure. Do keep in mind this is a possibly, and again, I can't say with certainty, this would be kind of a really ugly head and shoulder or inverse head and shoulders pattern, but it's possible this could also be an inverse head and shoulders pattern, which in this case, how do I explain what the neckline would look like? It would probably look something like this. Yeah, it would probably look something like that. But because it's not textbook, I'm not going to call it an inverse head and shoulders. I'm just simply going to say that this is a flip zone that has proven to hold as new structure as support. So, yeah, right now, basically 250, 260 would be kind of the area to maybe get some Coinbase on the cheap. Or if you're looking at CONL or something else, these structure levels on the actual asset itself is always the best thing to look at. So 210 to 226 down here would be the next level, with the target still being somewhere between 303 to 370. So worst case scenario, about 77% gain. So, whoops, that is, yeah, that's the next earnings. My bad. So yeah, they had a beat on both fronts. Am I shocked? Not really. I mean, Q4 was pretty good for crypto last year. So the next earnings should be in May. If the cycle continues as it's supposed to and we get that big alt season, then May earnings should be pretty good too. But I can tell you guys right now, the last time that we had earnings the first time, the price didn't really move a whole lot, but then we had a lot more good earnings. And if the rest of this year goes good for crypto, you guys can see the earnings were absolutely stupid, quarter after quarter after quarter. The price did eventually move up. It took a little while. You guys can see on this earnings back here. As a matter of fact, the price did absolutely nothing. Kind of went sideways for a few weeks, but it did eventually go up. Went from up 185% to up 260, 430%, 800%, so on, so on. So it might take a little while to play out. Okay, so MSTR. This one looks very, very similar to Bitcoin. Not really much of a shock there. So it actually kind of does look like a bull flag. Let me get rid of this because this is not textbook like it's supposed to be. If this truly is a bull flag, it should be probably something like this. And then the play out would be, I mean, the price would be stupid. I mean, it would be over $1,200 a share. And that is after MSTR had a stock split, a 10-to-1 stock split. I don't know if you guys remember that, but back here, 10-to-1 stock split. Pretty crazy stuff, right? So we could be seeing something similar to what I told you guys back here. This is a pullback in time, like on Bitcoin, and then a big breakout. And then we did eventually, sometime later, we did eventually fill the target. Took a little while, but we eventually got there. So for the structure levels, I would probably say the first area I'd look at is somewhere around this gap right here. So it's a little difficult to see, but you can see it right there. So right around 280 to 300 for MSTR, maybe MSTR, MSTY if that's what you're into, or MSTU, or any other, 2x, 3x leveraged ETF that you want to do for options premiums on. These levels would be good to look at. The next level I'd be looking at below that in case we get some kind of major dumpolo that just doesn't, Bitcoin decides it does actually want to go down. Fingers crossed, hopefully that doesn't happen. So 170 to 200 would be the next level. That would be a pretty substantial drop. So regardless, if it just gets back to all-time highs from this gap, it's about 92%. And then from this level down here, worst case scenario, about 217%. And I mean, it's nearly a 4x to get up to this flag target. So a lot of potential profits and upside here. And of course, the options premiums on MSTR or anything MSTR related is absolutely insane. So there is that. But anyways, I know the markets aren't really moving right now because the macro is kind of screwing with things. The Fed's kind of screwing with things, all that crap. I'm aware of that, guys. Okay, I know. Trust me, I feel your pain. I do still think this crypto bull run is in play, but if the price is not moving, there is some things that you could do aside from that. If you're worried about it, you could put some money into dividend paying ETFs, dividend paying stocks. You could do some options premiums, get into some crypto plays for some options premiums and waiting for the price to rip. You could also do it with stocks. There's a lot of money to be made in the options and in the dividend markets. You could do that. You could work more hours. You could create some kind of side hustle. There's a lot of things that you could do if your bags are full, if you don't plan on accumulating more crypto while you're waiting for the prices to move. And I don't control these markets. I cannot guarantee that the price is going to move in one direction or another, but you can see if I were just to, let's say, put on 5 contracts of MSTU, which is a leveraged play on MSTR, it's relatively cheap. It's only $850 for 100 shares. You get paid to put on the cash secured puts, $25 a week. So 5 of these, which really isn't even all that much, it's $125 a week of income. That's $500 a month. If you really wanted to, you could do that. Sit on the shares, wait for it to go up, and then use the money to buy some dividend ETFs or, excuse me, or maybe some more native crypto or something like that. So there are other things that you can do while you're waiting for the price to move. Again, not financial advice. You guys can do what you want to with your own money. It's your life, all that stuff. I'm just saying there is other options. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.